Well, let's get more on today's top story. China's central bank stepping its attack up on inflation and raising the reserve requirement for banks by half a percentage point. Right now, we're joined on the phone by our friend Keith McCullough. He's a Bloomberg contributing editor and also the CEO of Hedgeye Risk Management. Keith, good to talk with you.
Hi, Betty. How are you?
Okay, so give me your reaction on this. I mean, 50 basis points is not going to do a whole lot, but it is a step towards fighting inflation, right?
Yeah, it's definitely what the Chinese want to focus on. What I think is particularly interesting, though, Betty, is the timing. Now, the Chinese knew that Bernanke was going to be speaking with the Europeans about quantitative easing this morning. Interestingly, Bernanke said, well, calling it quantitative easing is inappropriate. He made a couple very interesting remarks. He also chastised the Chinese to a degree, which was a problem.
Oh, but he definitely chastised them.
And at the same time that he was doing that, Betty, the Chinese poked them. They popped them. They gave them an interest rate hike or a reserve, requirement, effectively a hike. So, there's no irony in the timing. I think the world war, as it is in terms of economic wars, has fully begun.
Well, and it's also, a counter by the Chinese saying, look, commodity price inflation is going to filter through to the economy. The Fed's wrong on that.
No, they're dead wrong on it. And it's interesting. Now the Chinese have their own data. It's interesting. U.S. government data has its own conflicts and compromises. So let's just assume that all governments make up the data to a degree. But now the Chinese actually have their own data. The consumer confidence data for China ticked down. It was just released this week. It ticked down for the first time in 6 quarters. And the number one reason for that is inflation. So 89% of people in rural China expect inflation in the next 12 months. That's the reality of life there.
Okay, so where do you think this leaves? I mean, this is certainly not going to be, any improvement in the relations between the U.S. and China. Where does this leave Bernanke then?
I think it leaves them in an extremely difficult spot. This morning I wrote a note quoting Bob Dylan, which said, when you cease to exist, then who you blame? And that's really a question for Bernanke, because now he's playing a very politicized blame game, and I think that he's going to lose that. So I think it ends very poorly. I think the bond market's already voting on that, and I think that you see interest rates backing up in the face of Bernanke promising to keep them down. I think it's a royal disaster for him in particular.
And further reaction, not just from China's central bank, but others?
Yeah, the interesting part about this is that the rest of the world has China's back, and particularly the Germans. The Germans are already out commenting on exactly what you heard this morning from Bernanke and Trichet. I call them the fiat friends. Both of these guys are saying what they're saying, and the Germans don't like it, the Chinese don't like it. That's going to be a very tough geopolitical win to fight.
Right. Well, then, Keith, for China, though, in and of itself, though, outside of this political fray that's going on, what more is China going to have to do? I mean, how much is inflation knocking on its door right now?
Well, I mean, it's a quantitative fact, to the degree that they've already done this. We know what they've done. From 2005 until 2008, the Chinese were stepping up the value of the yuan, and they were effectively, raising rates in a hybrid way that way. I think they'll continue to do so, and I think the biggest threat is actually Chinese growth slowing, and that's really going to have an impact on the U.S. If the U.S. doesn't realize that they need China to keep growing, they're looking obviously at the wrong thing.
Yeah, but on the other side, Bernanke says, look, you need the U.S. to keep growing. We effectively need the dollar to help us lead us out of this malaise that we're in.
It's a good point, Betty, but guess what? If you're Bernanke and I'm China, you are the renter of my apartment complex. I wear the pants in this relationship. We have put ourselves in the relationship whereby the Chinese are the creditor. There was a time when the U.S. could say, hey, no, we're more important, or the Americans could. I think those days are long gone. I think we've put ourselves in this position with debt.
Okay, and how does it play out for you, Keith?
I think for me, at the end of the day, I'm just flat out scared because now you have bonds doing what they're doing. I mean, this week, I couldn't even really hold on to my bond positions because you're seeing such unbelievable volatility in the bond market as interest rates back up. So in the face of that, we also sold all of our U.S. equity exposure yesterday. I just don't trust this market at all. Really?
Wow, okay. That's amazing. All right, Keith, thank you so much. I appreciate that. Bloomberg contributing editor Keith McCullough talking about his reaction, his own investment strategy in relation to what is going on between the U.S. and China.